So Thursday and Friday were pretty similar in terms of strong downtrends in the morning. Both had decent bounces in the afternoon. The bounce on Friday started about an hour earlier than the bounce on Thursday. So $3 down, $1 up. Friday, $3.50 down, I guess. I was short up from here in the pre-market. And $2, almost $2 up, $1.80 maybe. So people who are buying at the end of the day on Thursday were not rewarded. Well, we were slightly up, but very quickly the selling came in. Then this morning, people were bought into this. People bought right at the end of the day are out of the money. Anybody who bought down below 287 is probably feeling okay. I'm just trying to understand the psychology, people looking for this bounce. So the typical 1.5%, 2% down move that we've been seeing for the last 6 months or so, that's what we have right now. And so for it to be something bigger, that would maybe play out over the next week or so, something like this. And I talked about that actually. If you get a chance today, you can watch the first 10 minutes of the weekend review. I talked about that. I'm not going to spend any more time talking about that. But in the meantime, we're short-term oversold. You know, the most obvious thing is if we catch a bid the next couple of days is to retrace back up to here, 289.60 to 290, which is about $2 above where we are right now. I mean, we could do that this morning if the market catches a bid. So in this area here, and then we would kind of see, does this fail again? On the downside, higher low would be around 287, pre-market low, a little bit below 287, right here. The actual low Friday was 286.25. I was not on the desk when that reversal happened. It's a pretty strong reversal bar. Took us up to 287.25. So this is going to be the spot right here. It's going to be something like, we come up here, do we fail at the end of the day after hours area, and do we roll into here? Remember, even if we do have a strong bounce on the open and work our way up to this area here, what got the ball rolling on the downside was the late day sell-offs, sell pressure into the close 3 days in a row. Kind of the opposite of what we saw on the two big downtrend days on Thursday, Friday, right? Early selling, big early selling, and then buying at the end of the day. IWM, I think, is right at 162, which I've talked about a bunch over the last 6 months. We did flush through there Friday morning. Actually, I got long into right here, 161.20-ish. We did close above the 162. Buying steps in here today above 162. First potential resistance would be around 163.30. And then Friday morning's high 164. If we start to roll over in the morning, I would 161.25 right here. See something. All right, so I put PBR on here. Last time I traded this, I got long a ton at the end of May in the mid nines. Let's look at it on the daily. So Brazil is very in play. So the elections. So you can kind of see why I bought it at late May. It had just dropped. It had gapped down from $15 in like a week. It had come down to 10. So I thought the 6-month low was like right here. So now we've erased that entire down move. This morning we're at 16, where we were earlier. So same way I thought this was very overdone very quickly from having gone straight down. I think this having gone straight up, same thing. Notice coming into the news, the market seemed to be anticipating these results. It was, when we got back from Labor Day, this was $10.50. So it's already run up 35% into the election news. Now it's gapping to here. That to me looks like a sell the news situation. If you don't understand what Sell the News is, just Google Sell the News SMD blog, and I'm sure I've done some videos and blog posts on it. But the run up before the news is anticipating. So far, 16. So notice it's trending up, it's holding here, makes the new high, comes down, and now people are like, okay, it failed above 16, let's sell it. Maybe it'll come back down into this area here. So it's going to do a lot of volume. Normally it does 28 million shares, so it's a very low risk thing. You can trade this thing in blocks of very large blocks, 20, 30,000 shares at a time easily, very little slippage. And so even though it may only move 70 cents today, you can play with like 5 to 10 times the size of many other stocks. So it can be pretty good. So my first thought is fail. If they flush it all the way down into here, maybe it catches a bid. If it spends a lot of time in this area here and breaks to the upside, see how high I can go. I think I put 1650 for the next resistance on the sheet. So I didn't really like anything else that I saw with news. There really wasn't much news. I did put Costco. That was the one that got hit on earnings on Friday. So the high was actually R1 from the morning game plan sheet. So I'm sure some people shorted this pop into R1 and then looked to see if it could get below, was S1 222 maybe? It was even 225, I can't remember. Maybe 225 was inflection. So sold off pretty hard from R1 down to pre-market support. I think S2 was 220. And it closed below there. So it trended down all day. It's run up a ton the last 6 months. Closed at the low. What is that? That's a secondary play. Broke the uptrend. And really just the question is, what is the entry that you're going to get? What's the downside? This is downside. This is downside. It's this area here. My thoughts are GE, when we covered it the other day and we had 12 as support, that was when to start getting in. There's probably some more upside in it. It's run up now, what, 15% from there? So I'll take a quick look at it. The first thing I'd be looking for is some sort of failure at 220. Support 2 from Friday. And obviously if it takes out that 218 low from Friday, 216, 215 for downside, Not expecting as big a move as this. So that was 9, 4.5, 4.5. Yeah, so if this ends up being the top right here, 215, 216 for the downside, it's about right, half of this move from Friday. I still would, even if it got above 220, look for a failure. Give it one more shot in the short in this area right here. Then the restore gets really good. But if it rolls over and just even tests Friday's low, you've got some nice upside there. Facebook. So Facebook had its second close in a row below 160. The sentiment is really negative on it. Even after the earnings report, it didn't have two closes below 160. It flushed. I gotta go back. So here was the earnings. It flushed below 160 this one day, came in, retested, and retested. Had a really, I'm laughing because I can't believe I was short this at 171 like a week ago. Then it came down again. It flushed below, bounced, and now you're noticing it's starting to hold below 160. So that means support becomes resistance. So this now becomes resistance, potentially. See how that works? That doesn't mean you can't play it for a bounce. Like 156 to 160 is a decent $4 range. In fact, when it put in its low after the Cambridge Analytica scandal news, remember we spent a lot of time talking about it as it bounced off the low. It came back down and had a positive catalyst right around here from Zuckerberg saying their ads were not impacted by that news. So we're now down in that area. So it's big. It's just the sentiment is so negative. The question is, will they try to push it all the way down to the March lows? I think it's probably 50-50, maybe a little bit less, 40-60 that it could push down there. But I could definitely see this being a range for a couple of days. Maybe flushes down into 156, bounces back into 158. Somebody makes a positive comment, it works its way to 160. Then you look for it to roll over in this 159, 160 area. That's Facebook. AMD had the big down move already. Looks like it's trying to test the low from the other day now, the pre-market. So the psychology has probably changed a little bit. When we were looking at it the first time, it failed at 30 and it came in and held a few days at 27. Psychology was still up, right? It's in a strong uptrend. And so it's having these pullbacks, it's getting bought, it's having another leg, it's having these pullbacks, it's bought, it's having another leg, another leg. First time it comes back down hard to 30, comes back up, starts hold. So it looks like big run, now more of an extended consolidation. Maybe it'll hold here and go up again to 35, 36. But it broke to the downside. And so now the sentiment has changed. At the same time, Intel's getting stronger. So really the question is, can it hold on for this 27 here? It's below it right now, but not by much. If it can't, then it brings this 24.5 to 25.5 to play. I would think from a longer term perspective, this is pretty good. It's 20, it's like a quarter. It's about 25% from the high. I would even put this in the long term here against 22.5. Buy here against here, or move back up to here. Now, from an intraday perspective, so we had the big bounce a couple of days on Wednesday. Got up to 2860s. Failed there the next open, assuming this is real right here, this pop. Then the next morning it tried to pop again and made a lower. So just keep this in mind for when it bounces, and if it gets above 28, that this mid 28s is going to be a tough spot for it. And here's the downtrend. Anytime, so the way I look at it is, it comes off here on the open. If it spikes up and fails a little bit above 27, somewhere in this area here, and then you see back below 27, and then takes out 26.50. It's a pretty good chance it's going to go down $1.50 from there. On the flip side, it spikes up pretty strong on the open and gets up to the mid right here where it failed at the end of the day, 27.50, and doesn't really pull back below 27.30, then takes out the morning high. It's a good shot at it working its way back up to here. So I wouldn't overtrade it. I just want you to understand the recent prices. As a reminder, I just happened to notice that somebody put something in the Q&A. If you have a question in the morning meeting, put it in the chat. That's where I'm looking. Can't look at everything at once. G, asset sales. So I'm assuming people anticipated they were going to do things like asset sales when they brought in a new CEO or fired their CEO or changing of the guard. Here's the day we looked at it, 13, sold off, $12 our support. Next morning, flush, got above. Then they accumulated it for a couple of days, 12.30. And then it was bought strong on Friday and scapping up. So the question is it really worth paying attention to up here? So we got to go to the bigger picture. And so when it bounced from 13 back in April, they ran it up to 1460s. And it topped out above 15. So I think probably people are thinking it's going to work its way back up to here or here. What would that be? 1130, let's call 12, 20% off 12, 240. Yeah, that's about right. So 1440. 1440 is probably a reasonable bet this week for it. They keep on buying it. 20% off the 12 level. They're looking for a good spot to get in. They sell it right on the open. It's right here against this $13. Yeah, I chose not to put SGH in there. I thought the trade was if it held above 30, there was upside to 34. Pretty thin stock, right? Yeah, it normally does 800,000. So it hit our resistance like right on the open. Obviously, it was very strong. Went straight up from, didn't even touch 30 in the pre-market. Took out the pre-market high, went straight up. It tried to roll over twice. If it gets above 34.80, I'd want to see the 35 bid hold, and if it did, it's fine. And you have, where did it sell off from? It did sell off from $40. Remember, I don't remember what my exact thought process was when it sold off here, other than it seemed like it was overdone. The news was pretty good. It could definitely get its way back up to 34. And then after that, kind of was a little dicey. I didn't see enough there to think it could get all the way back up to here, about 36 maybe. So if you're lowering it, if it's holding above 34.80 and you want to give it a shot for the upside to 36, you do that. And the spread is wide, as Evan just said in the notes. So I just think the risk reward in the 30, 31 area was just quite good. It's okay now, not quite good. I like to take trades that are really good risk reward. So that's that. And there's a couple of other things we should take a look at. Netflix. I'm probably going to make an option play in this. I'll let you know when I do it, but I'm probably going to like sell the 320 puts and buy the 400 calls or something like that. They haven't had two bad quarters in a row in years. And it's pulled back enough from this recent bounce where I think the pricing on the options could be okay, maybe. Got to take a look at it today. I think the report next Tuesday. I think that's right. I'll take a look. So by Friday's options for next Friday. And by the way, selling the puts here, I would be perfectly happy if they didn't have that good of a quarter, being effectively long at closer to $300 a share. The top was 420, so that would be about a 25% down move. Is that right? 100, yeah. So, yeah, G, not an opening drive, slow grind. Drop out, then slow grind. And then what was the other one? Oh, there's one more thing I wanted to look at. Oh, Tesla. So Tesla's got some problems. Mainly, I mean, obviously they have some operational issues potentially. We'll see when the numbers come out. They just have Musk shaking the confidence of people more and more. So the stock's going to go to 200 if the cash burn was not good for the quarter. Not 200, like low 200s probably, like at least 230. But if they really want to crush it, it would be good to hear. And then on the upside, as I've said to you guys, if there were break even for the quarter, it's going to go at least to like here. So that's my thought there. I got to look at the options. They're always really expensive. You know, but if it gets down to this area here, it could be interesting, at least for the upside pricing. The downside pricing, there's already a lot of fear in the stock and people are just pressing the short, so it's probably too expensive to do anything with the puts. So I just wanted to mention that for those of you who like to trade the higher beta, crazier stocks.